It's definitely something filers should be aware of. And at this point, I'm going to pass it over to Campbell to talk about management's responsibilities.
Thanks, Phil. Can everyone hear me okay? Okay, good. So first, just to go through some of the things that what we're seeing with filings. I'll go through those and discuss some of the issues that we're seeing, and then talk about how you identify those problems and how to fix them. But firstly, just want to make this clear that making sure that you have a correct XBRL filing is the responsibility of management. You really want to have controls in place so that you can make sure that you get some guarantees that your filings are as the best quality that they can be. The compliance with any regulatory reporting requirements are the same for XBRL as well. Legal liability is coming into effect over a 3-year period. So just to be aware of that. And so what we want to do today is just give you an overview of some of the things that you can do to manage that risk a little bit faster and easily for yourselves. Instance documents are the same whether they're prepared internally or use the services of a third party. You really want to have some controls in place to make sure that you can check the filings. A lot of filers traditionally have used the rendering engine on the SEC as a way to view their filings. But what we've identified just looking at filings is that reviewing the rendering is really not sufficient. And one of the big issues it doesn't address is negatives, which we'll talk about in a minute. And the third point is that XBRL is subject to disclosure control and procedures. You really need to be doing something to make sure that when you receive if you're doing your filings yourself or you're getting them outsourcing them to a third party, that you have some process in place and take some minimal steps so that you can make sure that you're happy that the filings that have been prepared are correct. So if we go to the next slide, please, Phil. So this is a summary of the issues that we've identified to date in filings with the SEC. As you can see, it really from going clockwise around the pie, the biggest issue is non-negative items, and these are when companies are reporting information in their XBRL filing and the value has been put in with a negative, or if the value is expected to be negative, it's been put in as a positive. So the non-negs represent nearly 29% of all the issues in filings to date. So this is one of the biggest issues, and the reason that this is such a large issue, we believe, is because when companies are actually, if they're using the SEC rendering engine to review their filings, the signs may be different than what they expect. And there's a number of reasons that can occur, but one of the things you really need to do is to make sure that the value that's actually reported in your XBRL filing, if it is a negative, you really want to make sure that actually is the case. The second issue, which is also quite big, is invalid members. And what this is really when you report information using dimensions, you can qualify information that you report in different ways. It might be by segment, or it might be by country code, or it might be by legal entity. And what we're finding is a number of companies are breaking information down by categories that don't make any sense. So that's the second biggest issue. And then the third one is not so big, but it's the third one that we'll talk about today is effective weight. And what this is really putting the wrong calculation weights rolling up into balances when you report information. And this also has the impact of effectively meaning that signs are incorrect. So we'll walk through each of these three on the next 3 slides. So Phil, if we go to the next slide. So the first one, negative values. So there's 3 things really here just to be aware of. So consider the typical balance type of the element. Is it normally a credit or is it a debit? So one of the things that you want to be aware of is, if it's an expense item, for example, it's normally going to be a debit. If that is the case, the debit balance of interest expense should always be positive. If for some reason the interest expense becomes interest income, then that's probably the only reason that item would become negative. However, just because an item like an interest expense is interest income, you shouldn't use the interest expense tag to represent interest income using a negative interest expense. There are a number of tags in the taxonomy for interest income which should be used. It should be very rare that you should be taking an element and then trying to represent a balance of another element by representing it as a negative, because there are a large amount of tags in the taxonomy, and an alternative tag may be more appropriate. So if you have a reason that you think an item should be negative, you may want to look in the rest of the taxonomy and make sure there's not an element that is specifically represents what you think is a negative item. The third thing is to consider the definition of the element to determine if the value can be negative or not. There are a number of elements in the taxonomy, a large number that can be negative, things like obviously income loss or gain or loss, or payments and proceeds to or from, so or cash used or provided in. So there's lots of elements where you can have negative balances, and it's appropriate they should have negative balances. So just be cognizant of what the definition is, and read the definition carefully just to see if an item can be negative or not. So this is one of the SEC's biggest issues. They really want to make sure that the negative items are treated appropriately. One of the things that we haven't talked about here, but one of the folks may enter negative items when they review it on the rendering engine. It shows as positive is because they've used negated labels. So you really need to be careful if negated labels have been used to make sure that when you're reviewing something you think it's positive, but in the underlying XBRL it's actually negative. So you just really need to be careful of that. What a number of folks also do is they'll print out what are all the negative values that have been reported in my instance document to the SEC, and then just review those separately just to make sure that that they're comfortable that those negatives should be correct. There are things that XBRL US offer. We offer software that we've gone through every single element in the taxonomy and looked at whether it makes sense for it to be negative or not. So you can also run those checks and flag if an element should have a negative balance or not. Okay, next slide, please, Phil. So the next item, and this slide's a little bit it's a little bit XBRL-y, but some of you may or may not be familiar with some of these concepts. But this is invalid axes members, and in this case, in a lot of cases, you may have a need to split financial information up or categorize financial information by different types of legal entity. And then you can, and most companies would use a legal entity axis, and on that they would have, may have various subsidiaries. And one of the things they may have on there is the parent company. So if you wanted to report, for example, the revenues of the parent company, you can break up revenues by what revenues are applicable to the parent and to individual subsidiaries. And if we look here, in this example, a number of companies have used the parent member to represent this. However, this is an incorrect member to use. There actually is a tag in the taxonomy or a member in the taxonomy called the parent company member. So you click on that, and these two things are different. What the parent member represents is it's the parent, the amounts applicable to the parent that you would typically see in the statement of shareholders' equity. So this may be basically the balance of an account before deducting non-controlling interests. So obviously the parent company, the parent company member, on the other hand, represents financial information that is applicable to the parent company itself, whereas the parent company member is an aggregation of all your revenues, less any revenue that would be applicable to a non-controlling interest, or in most cases it's going to be something like net income. So it's just to be careful when you're selecting elements that go into a legal entity axis, that you make sure that you're selecting the right member when breaking stuff up. So we see a lot of cases where people or companies have put inappropriate members on axes, and to make sure that they've So be careful with this. Just make sure that the members you've used are appropriate. The next item, please. The last item is just incorrect calculation weights. One of the things that a filer does when filing is not only report the numbers, but also defines the calculations between numbers. And XBRL restricts how these calculations should work. And this little graph just really shows you how that works. A debit adding up to a debit must be positive, a debit into a credit must be a negative, credit into a credit a positive, and a credit into a debit a negative. However, these rules do not apply if there is no balance type on one of the elements involved in the calculation. So in this case, the XBRL software doesn't check. So for example, let's say you had assets and it didn't have a debit balance on it, and you were adding in accounts receivable. If you put a negative weight or a positive weight, the XBRL processor or software that you're using is not going to check that these rules hold. So if we go to the next slide. So in an example of this, a very real example of this in the USGAP taxonomy, and this is where most of these issues arise, is in the cash flow statement. And net cash provided by use in operating activities doesn't have a debit or a credit balance in it. There's a reason that doesn't have a balance there. One of the items that adds up into this is the reverse of net income. Because this is a reconciliation item, this means that if the actual balance of this account was put in, you wouldn't be able to define the calculations for your cash flow. But there is an implied balance of a debit balance on this item. And so, for example, an item like gain/loss on sales of loans net, which is a reversal of a non-cash item, you should see a weight of -1 on it, and that's what should happen. This item is a credit item. If you've got the implied debit on the balance, you should have this -1 weight. Unfortunately, what happens in a lot of cases is the item is added in with a positive weight, and to make the calculation work, the gain/loss on sale, the balance is flipped on it. So rather than the gain/loss on sale, if it was a gain being entered as a positive, a lot of companies are entering that gain as a negative. So when people are trying to consume the information, we have issues because some people have entered the gain as a negative, and some companies have entered the gain as a positive. So just to be careful about this on the cash flow statement, in particular rolling up into this element. And you can see there are a number of issues, a large number of people get this wrong. There's literally thousands and thousands. This problem occurs thousands and thousands of times. So be aware of this. Make sure that you're checking this. We make that available in the product XBRL US offers as well to check this, and I think a number of other companies do as well. So they're the three biggest issues that we've seen to date in filings. Just the negative issues, using inappropriate members on an axis, and just getting the calculations weight incorrect in the cash flow statement. There are a number of other issues as well that we can talk about, but if companies get those three, at least get those correct, they'll go a long way towards getting rid of a lot of the simple problems resolved in their filings. Today, there's about 9,000 companies have filed, about 54,000 submissions, and at the moment we've seen about 851,000 problems. Obviously, some of these, this number seems quite large, but as we saw, probably over 400,000 of those relate to those three issues we just talked about, and then they're pretty easy to resolve. It's just a matter of people focusing on them. And some of the other areas that we're seeing problems, just in general, is things like scale problems. We've had cases with companies with 2 quadrillion in public float. This actually happens a lot. You'd be surprised. The other problem too is that these scale issues numbers get understated too. So you really want to be careful when you review your filings. And you can see this in the rendering engine, but you've got to be very careful that you look closely on it, that you actually see that the millions, or if there's millions in the header in the rendering engine on the SEC website. So be very careful with the scale issues. These actually happen a lot, and the problem with them is that The scale issue will apply nearly to, most cases, nearly applies to every number in the financial statements. Interest expense is interest income, and we talked about that earlier. Don't use negative items to change the meaning of an element. And then here's another case of just 266 million of compensation-related costs. Was getting those confused with share items and monetary items. So you really want to be careful about making sure that you don't get the types mixed up and put the right unit on things. So with that, I will hand it back over to Phil.
Great, thanks, Campbell. And so now in this next section, we'll talk a little bit about a couple types of automatic validation. And I think what we really want to focus on here is that there's a couple different categories that validation tools can address. And it's probably important to just understand some of the fundamental distinctions between these categories. I won't go in a lot of detail about all of the validation or rules and requirements that are associated with each category because that would take a lot of time. Each of these have hundreds of rules related to them, but just kind of wanted to go through over the basic sort of categories. And so first I'll talk about different XBRL specifications and validation and the SEC Edgar Filer Manual, and I'll hand it back to Campbell who'll talk about units validation and US GAAP validation. And so first, related to the XBRL specifications, there's a couple that are often checked in validation tools. The first is XBRL 2.1, the second is XBRL dimensions, and the third is financial reporting taxonomies architecture. And so for the first one, is XBRL 2.1 specification. This is really the main specification which defines valid XBRL. It's a very big document. It's got, like I said, hundreds of requirements that we won't go into a lot of details about, but it ensures processors can understand the files. All these requirements serve a purpose, and that's to standardize the way that people prepare XBRL so it can be understood by XBRL processors. And it covers syntax requirements for data types, like Campbell mentioned, and units and precision. And also one that comes up a lot that filers see is calculation inconsistencies. Those are defined in the XBRL 2.1 specification. So that's one validation sort of category. Another one is XBRL dimensions. XBRL dimension specification really focuses on all the dimensional information which is expressed with axes and members. Filers that have now all done detailed tagging are probably a lot more familiar with dimensional information. Often comes up in business segments. And the dimension specification creates syntax requirements that an access must have a default domain and that it can't have more than one default domain within the same file. And so this should be distinguished about some of the examples Campbell gave before with respect to the invalid member combination. That's something that's more on the US GAAP side of things where it was a misapplication of using the parent member when they should have used the parent company member. And this dimension specification doesn't address those types of items. It just addresses sort of the syntax, the structure that Campbell's visual slide would have showed. The next one is FRTA, which is the Financial Reporting Taxonomy Architecture. And this one's starred because it's kind of a common validation. You'll see it in a lot of validation tools, but it's not required. So you may see some informational messages, but it's important to kind of keep those in perspective because they're not required. And what FRTA did is it basically established rules and conventions to make the information more easily understood. So it is a good idea to look at the informational messages, but again, it may not require any sort of corrective action. And the one we hear about the most that comes from FRTA is the LC3 convention. And that's a convention that gives guidance about conforming the standard label of an element to the name of the element, which obviously makes sense. If you had a element that had a standard label of accounts receivable gross and it had an element ID of accounts receivable net, that would obviously be very confusing to people. And so what the LC3 convention does is it tries to conform that standard label and the element name. But it's important to know that FRTA didn't give an automatic validation and specification for this convention, and so it doesn't address a lot of special characters. So a question we get a lot of times is, in one validation tool, a filing may have 5 LC3 messages, and another validation tool may have 7. And that's not something to be alarmed about. It just might be the way that validation tool processes some of the special characters, which might be a dash or a slash. And again, as long as the meaning of the standard label and the element ID are the same, that's really what that convention is getting at. So it's probably not something to be too concerned about, but it's important to understand. The next major category of validation is the Edgar Filer Manual, and that's the SEC's guidance and requirements regarding interactive data. The Edgar Filer Manual requires conformance with the XBRL 2.1 specification we discussed and XBRL dimensions, but it also adds additional rules. There's probably more than 100 separate rules and requirements in the EFM. It's generally broken down into 2 sections, syntax and semantics. And most EFM validation tools address the syntax requirements, but may not address many of the semantic rules. So if you are using the EFM validation tool, it is a little bit important that you get in to understand, is it just testing the syntax or is it testing the semantics, and which citations, because if the tool you're using aren't covering some of the items, you might need to set up manual review to make sure you address those areas. And so again, we're not going to go in great detail. There's a lot in the EFM, but just to give one example of each, the first example is kind of syntax, and this is section 6.14.3, which says that you can't have the source and target of a calculation relationship with different values of the period type. So basically, you can't have a calculation with an element that has an instant period type and an element that has a duration period type. But because this is a syntax requirement, it's very easy for validation tools to automatically verify these things and trigger them. So you might want to use automatic validation to check that. The next one is semantics, which is 6.630, which is invert the sign of a numeric fact whose element has an XBRL balance value that is inconsistent with the reporting concept being reported. And so this is important, and a lot of times it takes some human input. If you had accumulated depreciation on your balance sheet and it was represented negatively with brackets around it, but the element had a balance type of credit, as Campbell kind of talked about with the negative values, you'd want to make sure that you enter this value as a positive in the instance document so that it's properly reflected as a credit. And so there's some human input a lot of times involved with some of these, and not all the EFM validation tools are going to catch these types of items. And so with that, I'm going to bring it over to Campbell, who can talk a little bit more about some other validation.
So just to summarize what Philip has talked about, we pulled together this little chart which just gives you an idea of some of the validation you're going to have to do. And the first bucket really is you need to do this XBRL validation checks, which is just make sure that your document is XBRL valid. And the SEC runs these. If it's not XBRL valid, you can't file with the SEC. The second bucket is the EFM validation, which Phil was talking about. And some of it's manual and some of it's automated. But the SEC, so the XBRL spec validation applies to any XBRL document no matter what it's filed for. The EFM validation, which is in the purple, that applies to US GAAP filings, but it also applies to filings for mutual funds, and it will also apply for the resource filings that are required as well. And then you have checks which really are specific to the US GAAP taxonomy, and that's some of the checks that XBRL US makes available, so that you can start checking that items aren't negatives, etc., etc. So there's these 3 levels of validation, and the spec and the XBRL specification and the EFM validations are they're a bit more generic. So as you go down these, get lower and lower, you kind of need to apply more and more specific validations. And a lot of then at the very bottom is your, obviously your XBRL documents. And depending on what type of document you have, you may need to run different validations. If you're doing mutual fund filings, then obviously the US GAAP validations are not really applicable. So this is just to help you get an idea of where these lie. One of the things that the SEC had required in the 2012 taxonomy is the use of the units registry. Now the units registry finalized by, hopefully by the XBRL International Organization in the next couple of weeks, and once that comes out as a recommended spec, then the expectation is that all filers should use it. The EFM requires at the moment that people do use it. However, given that it's not a recommended standard, an approved standard yet, it's still in candidate release, then I think the FCC is not making it totally mandatory at this point. So let's just talk quickly about what units are and what type of validation this is. As referred back to the previous slide, this is something you really need to do in your document to make sure that you've used valid units, and it really applies at a spec level. It's kind of a lot more similar to a spec validation in the sense that the units can apply to multiple types of XBRL documents. So some of the key points to this, what is a unit for those who are not familiar with it? A unit is just a unit of measure. It could be a mile, it could be a centimeter, it could be a foot if it's a measure of length. It could be a measure of area, like an acre or a hectare. It could be a measure of volume, like a cubic meter or a cubic foot. It could be a measure of energy, like a barrel of energy, a barrel of oil equivalent. Or it could be, there's a number of different things that measures that can be used. And what the XBRL International has defined as what's called a units registry, and this lists what all the units are, and we'll talk about that in a minute. But that unit registry requires that the unit used should be consistent with the data type. So if an item is the production of oil production during the period measured in as energy output, then the unit should be things like barrel of oil equivalent, or it could be if it's a measure of what is the measure of area, then you really need to use an appropriate unit for area, be it acres or hectares or decahectares or whatever it may be. The second part that the units registry requires is that the relationship between certain data types and allowable unit values is described in the units registry. So the units registry lists all the units you're allowed to use. So if you have something which is a measure of area, you have to use one of the units that is defined in that registry. And then finally, the units registry is available on the xbrl.org website, so you can go and have a look at that. So we go to the next slide. Yeah, so if a data type, as we talked about earlier, if that data type is listed in the units registry, then only units associated with that data type can be used. So if you have a unit that's a power item type and it's in the registry, then you've got to use the units associated with it. And the registry will change over time. There will be new releases of that. So it just pays to keep an eye on what is in the units registry. Most software vendors are supporting the unit, checking with the units registry. So if you should ask your software provider if you're supporting checking of units. And if they do, then that software should be checking the units registry, so it makes sure that you're using the appropriate units. You shouldn't be creating extension units for units that are already defined in the registry. You shouldn't have to redefine acres again, it's already there. And finally, you can use units that are in the registry for different data types that are not in the registry. So let's say you created an extension element and you called it it had a different type on it. For example, let's say it was a decimal item type. The decimal item type is not defined in the units registry, so you could use any unit that's in the unit registry. So if we go to the next slide, we just have a look at what the unit registry looks like. If you go to the xbrl.org website, there's a link and you can click on it. I know this is a little bit small, but it just basically tells you what the unit ID is and then an explanation of what it is in a human readable name. And over on the right hand side there, you can see there's a conversion presentation and a conversion content. So it just really tells you what each of these units is equal to. This is not the entire units registry. This is just a screenshot of it. And you can see here in the middle of it there's something called item type. And at the top you'll see there's things like area item type and energy item type as you go down, and length item type. and each of those can have different things associated with it, like an acre or a square foot or a square miles. But if you're using an element in the taxonomy that's called area item type, you have to use acre, square foot, square mile, square yard. And I think there are a few more also reported on the registry. So we go to the next slide. Okay, this is just a diagram that, and this is also available in best practice guidance that we have on our website, so you can go and have a look at it just to make this a little bit clearer. But basically, what this tells you is, what kind of unit should be associated with different data types. And here you can see if you have the area item type, you should, you've got to use items that are in the registry. They might be acres as an example. Length item type might be miles. The decimal item type is more of a generic item type. It's not defined in the units registry, so you can use pretty much any unit associated with that. What the unit that you're measuring, though, should probably be described in the element name, which is using the decimal item type. Monetary item type, obviously the unit should be a currency, and most of you are doing that today with things like US dollars. On the right-hand side, and a lot of people have problems with this even today, is with when do I use pure or percents, etc. If you're using the percent item type, the unit should be pure. If you use the pure item type, it should be pure as well, or it could be a currency over another currency. And this is the only real rate this is really going to occur is if you're expressing an exchange rate, like US dollars over euro. There's a couple of others as well, which are things like where you can use the per unit item type or the per share item type, and this is really a monetary unit, like US dollars divided by a non-monetary unit, like something like shares or miles or whatever it may be. And the per unit item type, you'll see this a lot in the US GAAP taxonomy. This is really used to express things like prices or other types of measures which are reflecting a monetary amount divided by something else. In this case, you can see the example is ISO over miles, so this may be US dollars divided by miles, which might be a price per mile or something like that if you're renting a car or whatever. So that's really the units validation, and this is kind of just gives you an example. This is available on our website. If you go to the best practice guidance, we talk a lot more in depth about units. So given that the SEC is going to require this, is requiring it now, but you can probably make it mandatory in the not too distant future. You may want to just familiarize yourself with this, or make sure that your service provider is comfortable with it and their software supports it. So we go to the next slide. And I'll hand it back over to you, Phil.
Yeah, great. Thanks, Campbell. And then just to wrap up, we just had a conclusion here, and that's first, the SEC Interactive Data Program. Obviously, there's a need to be highly involved. Campbell did a great job at explaining a lot of the technical aspects of this. It takes a lot of effort, and it's definitely something that requires effort and being engaged about. The second is limited liabilities ending for most companies. So obviously there's greater responsibility that organizations have with these documents, and it's important to address that. And then lastly is kind of ease the burden. While these first two items are kind of difficult and coming upon us, use automated techniques and tools where you can. Not everything has to be done manually. There's a lot of really new and great validation tools out there that can address a lot of different areas for you, and so taking advantage of those automated techniques and tools can really cut down on the review time and improve the quality of the filing. So that kind of wraps up what we had today. If you have any questions, please submit them through the chat feature. We'll maybe just take a minute here to see what questions we have, and then we'll jump back on and answer some of the questions. Okay, we have one question that came in, which is, what are the automated techniques and tools available for filers to use? Campbell, do you want to try and address that one?
Yeah, sure. So obviously the first one is just in terms of XBRL spec validation, that if you're using a software that should comply, it should ensure that your tool is compliant with the XBRL specification. The EFM validation, a number of different software providers provide tools just to make sure your EFM valid. Now the SEC does automated EFM validation where they can, and but there's some things which they don't include and expect either people use other tools to do it or do it manually. There are a number of tools. Most service providers will embed some of those the EFM tools and the spec tools into their service offerings. But you could also use alternative ones as well. And there's a bunch that are available from different service providers. So you may want to talk with your service provider about that if you have one. If you're using software, they should be supporting that. But you really want to find out also to date. You may want to. They've been doing spec validation and EFM validation. You may want to make sure that they're supporting the units as well. In terms of US GAAP validation. XBRL US offers a product called consistency checks, which we've been using to roll out across a number of companies are using that, and that's quite detailed. We check on the flowchart that we had, or the pie chart. We're checking all those things. We actually run it on all filings that come in. And as we see people using the data or having questions like these errors in filings, we keep adding checks to it. So that's very US GAAP specific. The other, I know there's some other effort to also check for non-negatives as well. There's another product called XBRL, which is an open source software where they're doing some non-negative checking as well. And on the units stuff, there is a validation specification that's defined. So I will imagine that the SEC will support unit validation when people go to file. They should be doing some basic unit validation checking. But to what point that is at, you may really want to check with your service provider. We do some basic unit validation checking and the consistency checks. But you may want to make sure that if someone who's providing your main your specification validation software, it should be included in that. And if it's not, you may want to go to your service provider to make sure they have support for it.
Great, thanks, Campbell. Another question we have is, has the SEC sent any SEC comment letters about XBRL? And so I'll take that one. And the SEC has sent several SEC comment letters about XBRL. To date, they've mostly related to registration statements, not including XBRL as required per the regulations. But I would expect, with limited liability ending, that the SEC will continue to issue comment letters about XBRL, and I'd imagine that would even grow. We'll see if we have. Another question is, can filers still use the 30-day grace period? And I'll answer this one as well. Most filers will not be able to use the 30-day grace period any longer. The 30-day grace period was only available for companies when they first filed XBRL and when they first filed their detailed tagging requirements. And so since almost all filers have already filed in the detailed tagging phase, the 30-day grace period is no longer available. I suppose if there was an IPO and a company had its first 10Q that would require XBRL, they could still use the 30-day grace period. But other than those few exceptions, filers will not be able to use the 30-day grace period any longer. We have one here. Where is the best practices manual located on your website? Campbell, would you like to answer that?
Yeah, and I don't know if you can show it on the screen there, Phil, or not, but if you go to the XBRL US website, which is XBRL.US, there is on the right-hand side of the website, there's something called Tools and Data.
Yeah, I think we've got it up now.
Yeah, and you've got a tool at the Best Practices Committee, the first item. You click on that, and then on the right-hand side there is a resolution summary, and that's basically the best practice. That's a summarization of all the best practice guidance that's been issued to date, and on there, within that document, you'll see the units thing that we referred to.
Okay, I think we have a few more questions that will be better for us. We can respond to in email rather than the webinar, so we'll do that. And I think we'll bring our webinar now to a close. I'd like to thank everyone for attending, and please don't hesitate to contact us with any further questions. Campbell, thank you very much for participating with us. Really appreciate having you do this with us.
Thank you very much.
All right, thanks everybody. Bye now.